Indian markets opened in the green, with Nifty in fact scaling a new record high of 20,977 mark in the morning trade. And both indices are trading higher this morning. Sensex is also about 40-50 points off its day's high. The mid cap and the small cap indices both have also scaled a record high. The Nifty mid cap 100 has surpassed 44,700 sort of levels in the morning trade, whereas the small cap index has surged past 14,600 levels for the very first time. And volatility index India VIX is also down by about 1.22%, and currently sits at about 12.5 sort of levels. And this augurs well for the bulls, because a decline in volatility at a time when market has risen so quickly is a good sign for the bulls, and perhaps indicates that the rally is going to continue moving forward. Now, on an event day, typically the market likes to wait on the sideline till the decision of that event comes out, and take cues from there. And in terms of events, we have a big one. Reserve Bank of India Governor Shakti Kanta Das headed Monetary Policy Committee will announce its decision on the monetary policy today at 10 a.m. So just in a few minutes from now. Now, the broader expectation is that the RBI will maintain the rates for the fifth consecutive time at 6.5%. But we need to be watchful of what the central bank signals in its tones. A few questions are expected to be answered here. Is RBI still ultra worried about inflation? Now, November-December headline inflation, according to a lot of analysts, is expected to come close to about 6%. Now, will that keep RBI hawkish in its tones? Also, I guess, more importantly, if this will, help them, or if this will make them raise their inflation forecast going forward. But coming back to the market, Nifty is on a stellar run. It's on a 6-week winning streak now, and we have not seen this kind of a run since December 2020. And more importantly, I guess the pace of increase has only increased week on week. So far this week, Nifty is up somewhere around 3.5%. Its best weekly winning run since 2023. And it makes you wonder, where are we headed from now? But to answer that and more, let's bring on our guest, Mr. Aamar Singh. Welcome to the show, sir. Always a pleasure speaking to you here on First Take. Now, the up move has been so quick, and there is a case for taking perhaps some profits off the table now. But then again, heavyweights are still a fair distance away from their 52-week high, the likes of your Reliance, HDFC Bank, and so on. And banks have only joined the party now, which also makes a case, that there is perhaps more legs to this rally, isn't it?
Yeah, you rightly put it that it was the financials and the banks. If you look at both Nifty versus Bank Nifty, so Bank Nifty recently breached its all-time highs, whereas Nifty was trading at its all-time highs. So Nifty was anyway relatively in a stronger position, or on a stronger wicket as compared to Bank Nifty. But we've seen that now being compensated by the sharp rally in Bank Nifty over the last few trading sessions. And you rightly said that the heavyweights have started a move. So that's very interesting, because HDFC Bank, the likes of Reliance and ICICI Bank. So these are some of the major heavyweights, which ICICI have already had a very good decent rally, but HDFC Bank and Reliance in particular, they've started moving or gaining momentum recently. So that's a very positive sign. And rightly said that these heavyweights have to move in order for Nifty to make any significant, because these two in itself compose close to around 20% weightage of the Nifty. And also, if you look at the broader market spectrum, so we see that stocks trading above their 200-day moving average, that's close to almost 75-80%, which is very high. So that clearly reflects that the bullish momentum is not across some certain specific pockets, but across the board, which has a positive impact. Also, the advanced decline ratio, that also is heavily tilted in favor of the bulls. So these are broader indicators, which gives us a sense as to what's the undertone of the market and how strong the undertone is. Apart from that, the RBI policy is there, so it's a status quo which is expected. Yeah, inflationary concerns are there, but it's in a comfortable, I would say, in a sweet spot as far as the inflation is concerned. If you look at crude oil prices, that also has been a blessing for us in the recent the way crude oil prices have corrected. So
Right.
these are good signs, and also the earlier concerns with regard to inflation actually moving on the upside, that's somewhat contained. So that chatter has also come down. So we'll have to watch out for the positives are there, and yes, Nifty has had a spectacular rally. And the other thing what we need to remember is that there was also a lot of shorts which were built into the system. So we're not expecting that Nifty would breach, say, around the 20,000 level or 20,200 levels, because once that level was reached, Nifty witnessed almost a 4% rally, 4% rally from those levels. So that was more of short covering which has happened. And also, yes, FIIs have also come in now, so that's also a positive thing. We'll have to see how long this trend continues. Apart from that, the bullish cues definitely are positive. So I think all things are going. But and the best part is India VIX remains below the 13-14 mark. So that also currently around 12.7. So that again is a positive thing to look at.
Now, Mr. Singh, to the common man who's not invested in markets, this kind of pace of increase, this rally that we have seen, it may look like the markets is some sort of a Soni ki chidiya. What would be your advice to them?
I would say that, see, you have to remember that if you are in the market, then you have to be in the market for a long period of time to actually make money or create wealth. That's something that there is no doubt about it. Secondly, you have to remember that it's not a one shot. It's like a marathon. It's not a 100 meters race wherein you just finish it off and you're done for the day. It's more of a marathon. So you have to have a consistent strategy of investing in the markets, whether the markets are trading at a record highs or whether the markets are witnessing a significant correction, because then that's the way you really make money. But for that, you have to understand, again, if you're investing in mutual funds or ETFs, then that's a good way to start. For those who want to get into stock SIPs, then they should have a portfolio of stocks wherein they should be very clear or have a clear sense that this company is going to be there for the next 10, 15, 20 years. That's a mindset which they need to have, because there are so many stocks which are rallying, defying all laws of gravity also in terms of the move. So we should not get caught up in this optimism or I would say enthusiasm. So we should focus on stocks which are fundamentally strong. And yes, then you either build a portfolio or go through the mutual fund or the ETF route. But again, on a sustained basis, on a SIP mode.
And what should be their portfolio allocation? Should they lean towards the large caps now, or mid cap and the small caps? Do they still offer value?
I would say that one should look at more of a multi-cap, because I'm in favor of that, because small caps at these levels, I wouldn't recommend. Mid caps, yes, but having a mix of large cap and mid cap, and to a certain extent a small cap. So multi-cap is a better approach for I would say investors. That would make more sense.
All right. And I also want to get your view on the banking pack. You know, we saw some bit of a consolidation take place on the weekly expiry date for Nifty Bank on Wednesday and Thursday. It was pretty much flattish. But we have surpassed 47,000 levels. We have taken 47K once again. Is the rally expected to continue over there?
Yeah, so if I look at Bank Nifty in particular continues to remain, I would say, extremely strong on the charts, because earlier Bank Nifty was unable to breach the 46,300, 400 zone. It's almost up by 607 points up. And as I said that, like if you look at the likes of Axis Bank is doing phenomenally well. If you look at ICICI Bank, ICICI is one where it has got an interesting, I would say, pattern there. And it's unable to reach its earlier highs of 1020, 1030 zone. That's a zone of resistance for ICICI Bank. So if that is taken out, then we could say that again the next leg of rally is there, because ICICI, HDFC Bank, Axis, SBI and Kotak, these form the major chunk of weightage in the almost 75-80% in the Bank Nifty. So HDFC has started taking off, so that's a good thing. Again, HDFC needs to sustain. If I look at HDFC, so HDFC Bank needs to sustain above the 1670 levels, because that's a zone of resistance from where it had corrected from to almost 1450, 1460 levels. So 1670 is a level to watch out for HDFC Bank, and 1020, 1030 is a level to watch out for ICICI Bank. If these two levels are taken out, and the markets are not very far off from these levels, if these levels are taken out and they sustain above these levels, then we could see a next phase of rally in I would say, Bank Nifty.
Now, keeping it with stocks, one stock that was in action and has been in action for, the last 2-3 days is Paytm. Now, the stock dropped by as much as 20% to hit a lower circuit yesterday. And this morning, we are seeing some bit of a recovery. The stock is currently up about 2% or so. Now, the big crash was on the back of Paytm saying that it's looking to exit the small ticket postpaid loans. The company also said that it will not affect their margins and revenue much, but the kind of movement, the sharp decline we saw in the stock price, is that justified, Aamar?
Yeah, I would say if you look at Paytm, Paytm has got, I would say it's been on a more of a yo-yo sort of movement. The stock has witnessed above 1800 levels, then 400 levels, and then almost 430 levels. And then it bounced back significantly. So if you look at the stock, go back in time. So in exactly the first week of December, it had made a low of around 440. And from there, the stock rallied all the way towards 1000 levels, which is a phenomenal return for investors who would have invested or maybe would have got anywhere when the momentum started picking up. What we are seeing right now is the stock correcting significantly. You rightly said that this week itself, the stock is down by almost 22-23%, wherein we are seeing a records being made on the benchmark indices. So that tells that there are definitely some concerns which have crept in the stock, and also the stock is, I wouldn't say this is profit booking, because in profit booking we don't see such type of fall. And if there is a fall, then there is a pullback also, which we are not witnessing. So that tells me that something is definitely happening in this particular stock. As far as the levels to watch out for, if you go back in time again, somewhere around March of this year itself, the stock had made a low of around 556. So 550-600, that's going to be a zone of support for the stock. And if you look at the long-term trend, I won't say it's negative, but it's more or less consolidation, which is there after the rally that the stock witnessed from 440 levels to almost 1000 levels.
All right. Now, Aamar, as we speak, we are just a touching distance away from the 21,000 mark on Nifty. So it's pretty much done and dusted. For December, where do we end? Where do we end this year at?
I would say, what we are seeing is that the way Nifty has managed to sustain above these levels. So 20,000 earlier, it was 20,200 and 250 zone, 300, you can say 20,200, 300 zone. It's taken that out like a piece of cake. So it's just trading significantly higher, almost 600, 700 points higher from there. And also the momentum is there. And also if you look at the I would say three factors, primarily four factors, which are very crucial. One is that crude oil prices, they continue to remain very low and on the lower side. So that's a positive. So inflationary concerns are not that much of a concern as of today. Secondly, the global markets, the US markets have also been extremely resilient, have bounced back significantly. So there also the positive momentum is there to stay. And thirdly, what we see is that FII flows have started coming in, and whether this trend continues, because ultimately markets are all driven by liquidity. Right. So that liquidity has to be there, and also the liquidity and the sentiment. These are the two factors which really drive markets. So I would say currently we are in both the cases, we are in a positive space. So I would say that for Nifty to levels to watch out for somewhere around 20,500, 600 immediate zone of support if there is a correction. Any correction should be used as a buying opportunity till the time we don't see India VIX trading above the 15-16 mark. That would be some concern or some trigger to look at. On the upside, breaching 21,000 levels, then it's definitely significantly trading higher.
Now, Mr. Singh, the market, everything looks hunky-dory. We are, scaling all-time highs, both the broader markets and the headliners pretty much on the daily basis. Gold is at a record high, but rupee is under pressure. In fact, we are at a record low. What gives?
I would say, the RBI has a twin policy. One is to manage inflation, and the second is to manage the rupee. And I think they've done quite well there in that sense that the rupee, though it has not appreciated, which would say around to the 82 levels or so. But it's not depreciated also. So somewhere we are seeing around 83, 83, 40 or so. And it's, if you look at rupee charts, I would say it's someone who's a trader, he wouldn't find much of a trading opportunity, because there's a complete lack of trend. It's more of consolidation. It's more of a range play, and that also within a very narrow range of 40 to 60 paise. So somewhere around, I would say 83 on the downside and 84.50, 84.60 on the upside. That's 83 on the downside and 83.50, 83.60 on the upside. That's the range that rupee has been trading consistently. Talking about gold, yeah, gold has bounced back. So that reflects that investors are also looking at gold as an investment opportunity going forward if there are inflationary concerns or because crude oil prices from the current levels, I don't think there's much scope for a downside move
All
until
right.
unless we see